Today I'm sitting down with Ian Rountree, the founder and general partner of Cantos Ventures. Cantos is a venture capital firm based in San Francisco, and they focus on investing in early stage deep tech companies. Now, Ian will probably object to me calling it deep tech, but you'll have to listen to the conversation to find out why. I met him about 4 years ago, and the more that I learned about his overall investment thesis and how investing in new industrial technologies was a critical piece to it, it was highly aligned to actually where I was making my angel investments. And I believe so much in his approach that I became an investor in his fund. So in full disclosure, I'm a big supporter of Ian and what they're doing over at Cantos. Now, what prompted this conversation was a few months back, Ian put out a very interesting tweet around how he thinks about investing in decentralized production and when it makes sense. So I asked him to come on and have a conversation where we break down each point of that tweet in more detail to give you more of a perspective from an investor, venture capital perspective of when it makes sense to look at a decentralized production model. Now, in addition to this, my whole kind of objective here at Going Direct is I really want to build a resource and a community of creators and entrepreneurs that are building the future of decentralized production. And Ian is actively taking big bets and investing at the very earliest stages in backing many entrepreneurs that are building this future. So I was really excited to have him on and to talk all things decentralized production and also the realities of it only makes sense when you have a market-based approach that can outcompete our incumbent systems of production, which is actually really hard to do, which we get into. So in the conversation, I ask him what venture capital really is, why such a small percentage of companies are truly venture type investments, and then we nerd out about decentralized production. I hope you enjoy, and remember to go direct. Ian, what's going on, man?
Good to see you, Jordan. I'm excited about this.
Cool, me too. So listen, obviously we know each other from your work as Cantos. So full disclosure, I am an LP in one of Cantos' funds. And the main reason is I'm a very kindred spirit of Ian and really love what you're building and have a very similar thesis in many different areas that you're actively investing in, but you're way smarter than me on the technology side. I'm a real economy guy. So so I'm excited for the conversation and kind of I think the main theme which we'll dive into is everything around decentralized production. And I think someone who's in the venture space and has thought a lot about this, I think it's going to be a very interesting and nuanced discussion because there's like a lot of factors that I think that go into like the importance of decentralized production. I think there's some limiting factors as it relates to venture and in supporting that model.
Totally.
Cool, man. All right, so let's start here because this is like literally one of my biggest pet peeves, especially over the past few years, and as someone that actually got trained in the fund world very early on in my career. Okay, so and everyone has a VC fund now. Can you explain to the audience what venture capital actually is?
Oh, that's a really good question. So venture capital in most sort of broad pools of capital, you got your public equities, you got your private equities, real estate and all that, bonds. Venture capital sits in the private equity bucket, which might be counterintuitive to people who might know anything about VC and private equity because they're thought of as like having very different mindsets. They're actually two flavors of the same thing. It's just that private equity tends to take control positions and, in more mature companies and focus on immediate cash flows, whereas venture capital tends to be minority positions in early stage. And if we're being honest, largely speculative companies that are losing money and they're taking more risk, presumably for more upside. But it's longer duration. I think at its core, we're effectively doing the same thing which is trying to invest in businesses that will one day be profitable. Venture capitalists just tend to take a much longer time horizon and therefore discount on things, presumably. The lines between the two have sort of blurred as venture capital has gotten a lot bigger and companies stay private longer, and there's venture capitalists that are doing things like taking control positions in companies or incubating companies or, in one sort of infamous case of one of the large multi-billion-dollar venture capital firms recently bought a hospital. That's kind of straight out of the private equity playbook. But that's from a financial sense, what venture capital is. The way I think about venture capital is at its core finding exceptional people at the very beginning of their company journey and betting on them and maybe a broad space that they're interested in. But that's from our lens of in today's parlance, quote unquote, pre-seed investing,
Mm-hmm.
which is really just investing in an idea that isn't a company yet when they're first getting started. And so at our stage, it's really about people and a general idea, and the business comes later.
Cool. And so, and we'll talk just a little bit more about Cantos before we hop into decentralized production. But before I do that, okay, I'm just trying to give some foundational knowledge here for the folks that don't come from the finance world or the fund world. So okay, you're investing out of a fund. Let's just say you make 20 investments in the fund. Can you just kind of just describe to people kind of the return dynamics as it relates to like of those 20 companies so they really understand kind of the risk reward profile of venture? I
Yeah.
don't think
So
people.
again, what venture typically does is you'll have a venture firm that every whatever 2 to 5 years raises a new fund. Those funds are typically 10 to 12 year vehicles where the investors are signing up for a decade. And you say, look, we're going to go find whatever your strategy is, 20, 30, 100 different startups to invest in this sort of 3, 4 year fund cycle. And then we're going to wait and hopefully enough of them go public or get acquired that it makes up for the rest. And the way that venture capital works is sort of roughly statistically over time, and this is evolving of course, but if you look back over the decades the venture capital has been an asset class, it's sort of that like a third of the companies go to zero, a third maybe you get some money back on, but it's not making you money, and then a third generate the returns, and within that third something like 2 or 3% of the companies generate the vast majority of the overall gains in the asset class. And this is referred to as the power law because it's a statistical distribution that is not a normal distribution where you have kind of a bell curve. Your big, the hump in the bell in this distribution is like skewed way out on the edge. In that is technically referred to as a power law distribution. So you hear people in venture capital talk about the power law. That's what they're saying. It's basically like an extreme Pareto, whereas it's not like 20% produce 80%. It's like 2% produce 90% of the returns. And so taking that lens, you basically want to find, the one, whatever it is, Google, SpaceX, Stripe, Genentech, Tesla. And if you invest in one of those, then it doesn't matter that your other
Sure.
29 investments went to zero.
Sure. Cool. Well, you answered my next question because it was like just explain the power law. So we did
Yeah.
that.
Part and parcel to venture capital. I think, some people will use sports analogies where it's like, it's not about batting average, it's about slugging average, or, you're going for a grand slam, but it's not quite right. It's like, imagine you're playing baseball, but it's possible to hit a grand slam that can score like 1,000 runs.
Sure. Would you say this is kind of my last question on just like fundamental 101 before getting into it? And is this the reason why I want people to really understand, like, especially founders, that actually very few companies, like the very small percentage of companies, are actually venture backed companies or should be venture backed in my mind. So I don't know. Do you have any thoughts on that?
Yeah, there's a bunch of people that would debate us on this, but
Or not? I don't know. Maybe you would disagree with me. I don't know.
I literally just right before I logged on, I hit publish on a blog post I wrote called "Don't Call It Deep Tech." So Google that, and you'll see some of my thoughts on this. But for for the past 20 years or so, tech and largely venture capital have been more or less synonymous with software. You think of tech and you think of now the Magnificent Seven, right? I mean, granted, it includes Tesla and Nvidia, but you think of Microsoft and Apple and Google and Meta, and Amazon. And these companies, though many of them have a real world component, and Apple Computer started with computers, not just software. Most of the attention in venture capital has been on these fairly capital light software businesses, or at least perceived to be capital light, or they're capital light in the beginning, because when AWS launched to third parties in 2006, you didn't even have to build your own servers anymore. I mean, it used to be to start a software company, you needed a couple $1,000,000 because you had to go buy like physical servers and set them up somewhere. And like that was step number one. And then AWS launched, and now a proliferation of different tools and APIs where it's basically pure OpEx. Like it's not you have to invest it up front. It's just you spend it as you go and as you make money. And that was really interesting for investors because they saw higher return potential there. And it understandably attracted a lot of capital because you could build, YouTube or Instagram with like a couple $1,000,000. And, when those two companies were purchased for $1 billion plus, each of them, I forget the exact number, but I want to say Instagram and YouTube, when they were acquired, had like less than 20 employees.
Yeah, it's crazy.
And you just didn't, you'd never seen anything like that before. And so then all this capital piled in was like, this is the greatest thing ever. But, supply and demand work such that that opportunity can sort of get arbitraged out and go away over time. And you get so much money that piled in that, arguably most of the opportunity has been had. And to be clear, I'm not saying there aren't going to be great software businesses that get started, but it's certainly harder now than in 2006.
Sure. Cool.
And so we believe that the opportunity going forward largely exists in bringing technology, including software, into the real world, escaping 2 dimensions, going into 3 dimensions. The great products of tomorrow won't be screen-based. They might involve industrials and energy or biology or robotics or, aerospace. And that is basically what Cantos does. We focus on 3-dimensional technologies. Some people call this deep tech or frontier tech because it's different than the software thing that everyone's been focused on for 20 years. Mm-hmm. But if you look back to the origins of venture capital, it is rooted in hardware businesses, in semiconductors, in satellites, in defense tech, server racks, and computers. And so we sort of see what we do as just old school venture capital, but people will apply these terms to it like deep tech.
Sure. Yeah, it's like kind of going back to the roots. All right. So you talked a little bit about what Cantos focuses on. So let's move over to decentralized production. So why, and I know there's a few companies in the portfolio around this theme, but just talk me through why decentralized production is part of your thesis or gets you excited about it.
Yeah, look, the core of our thesis, if we can even call it that, is we want to back people who are solving the biggest problems in the world. And for us, that largely means that they're contributing to, planetary health, human health, and/or societal health. Those are, of course, very broad themes. And the objective there is to reduce the cost of a necessary good or to improve the standard of care in healthcare. And you can more or less boil our entire portfolio down to those 2 things. Occasionally you get something that's just completely new altogether. It's not reducing the cost of something that already exists. You're inventing something totally novel. The end game is to help people live better, more affordably. So decentralized production can be a means to that end, but we're by no means dogmatic about it. We like to say that we are problem obsessed and solution agnostic.
That problem obsessed, solution agnostic. It's interesting. My kind of obsession with it is, I have a different lens, obviously, a little bit, but my obsession with it is, and the reason why I'm doing this is because I hear very few people talking about it. From a business standpoint, there's all these trends coming. It's going to happen more and more. But I actually think this is it's a root of it's It's a big like root of the problem around loneliness and being completely disconnected from the things that we buy. I think it's a really, really important thing for our daily lives that we need to get more connected back to the things that we're purchasing. And I think it goes very, very deep to human happiness level. So, and I just wanted to mention that because I think it's important. Like I said, that's just my own like lens of why I think it's important. And maybe I'm influenced having a French wife and having a lot of exposure to the French system on this, but I see it like how it affects a lot of people's daily lives, and I think it's pretty powerful. So, anyways, um,
Yeah, we're probably a little more utilitarian about it because I just want people to live better, more cheaply, and we'll get into mechanistically how this can take shape, but there are like the status quo that you have alluded to is basically the logical conclusion of economies of scale
yeah,
and outsourcing, right?
yep,
Water goes downhill to the cheapest source of labor, and economies of scale are powerful for those that aren't familiar with the term. Economies of scale being the more you make of one thing, the cheaper your cost of production gets. And you extrapolate this to the nth degree, and you get basically all production is centralized in like southern China. And there are benefits to that. It has resulted in, on balance, cheaper stuff. There are also downsides to it.
yeah. This is why I wanted to have the conversation with you, and we're going to get into your tweet because that's what actually prompted me to reach out to you about having this conversation. Because I want to have more of a utilitarian conversation about this and a more realistic conversation about this because people don't really understand how strong economies of scale really are and how difficult it is to do this. And so I think having your lens and your approach and getting your perspective on it will just be really helpful because it's a lot of things sound good in practice or in theory, but when it comes to practice and when you're competing in a market, it's a completely different thing. All right, so you ready? Let's hop through it one by one.
Let's do it.
All right, cool. So I'll frame it up here. I'll prompt you for each point. So basically, not too long ago, you tweeted out decentralized. I mean, I'm just reading here. So decentralization sounds cool, but it only beats scale economies when one of four things happens. So we'll go for the first one. I'll let you kind of walk us through it. So the first one is the value density of the manufactured good is low enough that logistics costs really eat into your margin. Examples: cement and steel. Walk us through that.
Yeah. So by value density, I meant like literally the density of the thing, right? Like if you're making a, you know, gold rings or pharmaceuticals or some rare special chemical that commands a high price, and it doesn't weigh a lot per unit of value. You can ship it wherever. Like if there's a gold mine and it's copper, it better be somewhere close to rail, or it might not be economic to pull it out of the ground. If you find a gold mine, sometimes they'll literally helicopter that stuff out. And so this is saying that um, when when the shipping costs are high, then you lose some economies of scale because there's like a geographic component to it, right? If we're shipping T-shirts or shoes or whatever, fine, make them in Shenzhen and ship them around the world. But if you're making something heavy, then your orbit, where like sort of I think of it as like the economic gravity well,
Mm-hmm.
is smaller. So cement plants can be extremely capital intensive to build, and if you're within 300 miles of one cement plant, good luck competing with them. But if you're
Mm-hmm.
400 miles away, they start to lose their advantage.
So really, to simplify it, it's when the shipping costs are just a higher percentage of the value of the good, essentially.
Yeah. And I really think of this as like I'll see if you could plot whatever um, the plants on a map, like just draw a radius around it. um, and it's I think of it more. I'm a armchair cosmologist, so I think more in terms of gravity wells because there's sort of like this accelerating. There's like an inverse square, or like the closer to it, the more advantageous it is. So I think of them as like these sort of wells in the map. But if you're outside of the well, then like it's not, you can't even feel its gravity. And so there will be opportunities where we've invested in decentralized and greener steel and cement production, and lumber mills, and these are areas where it's expensive to ship the thing, and so you'll get this sort of radius of a few hundred miles or whatever, where within that they're extremely dominant. But if you can afford to build a cheaper plant and plot it in the gaps between the big radii, then you can have similar advantages in a smaller geography. But you build a lot of those plants and it adds up.
Sure. Cool. Great. All right. Number 2, time really matters.
Yeah, that one's pretty straightforward, right? Like if you don't, yeah, we order something on Amazon or Temu or whatever, and it takes a week to get to us, whatever. But if it's we're waiting on an organ transplant or something, much better to have that close to you.
Yep. Cool. All right. Number 3, the producer of the raw material and the customer of the final product are the same entity or otherwise co-located.
Oh yeah, and then I gave a kind of esoteric example in biology.
I'll just leave that. I'll leave that off to the side.
I said autologous cell therapy. If there's any bio nuts.
I was going to pronounce it wrong, so I was like, I'm not even going to go there.
So yeah, if you're like, sometimes you're making something, and there's like a co-product that maybe you sell off or something. It's like not a core part of your business, but if you don't sell it, it's sort of lost revenue. It eats into your economics, and so you're making oil, and you also get naphtha that goes into other stuff, is a common one. And if someone comes along and they're like, oh, hey, that thing that you're selling, we can actually turn that into another input that you need, that you're paying someone else for to ship it from hundreds of miles away. And so why don't we just plop our thing right on site, and you just put one hose in and one hose out, and you recycle your own product, essentially. Would be like the simplest example. And so if there's we invested in a company that makes jet fuel from CO2. And if you are, you have an industrial process that produces CO2, but I don't know, there's an airport nearby or something, then we can just turn the CO2 into jet fuel and sell it down the street. This again gets back to sort of the geographic component. I mean, all these really do get to the geographic component.
Cool. All right, last one might be a little bit harder to explain, but it avoids regulatory hurdles or other exogenous rate limiters.
Yeah.
And use the example of hyperscalers buying a radiant nuclear reactor to live behind the meter. So most people don't know what that means. So break that down.
Regulatory are basically like you look up like any nuclear energy stock right now. Big ones, Constellation Energy, that actually develops nuclear reactors. Some of the new novel nuclear reactor startups that are public are Oklo and NuScale and Nano Nuclear. I'm not recommending these investments. I'm full disclosure actually short a few of them because I think it's gone a little out of hand, as much as I like nuclear energy, but that is also not a recommendation. I've mostly lost money on trading options. But if you look up like Oklo, NNE, NuScale's ticker is SMR for small modular reactor. Like these things have gone bananas because everybody now believes we need nuclear energy. The problem is we haven't actually built that much nuclear energy. I think there's been one new nuclear plant in like 30 years or something. Total, the Vogtle plant in Georgia, which was like ungodly expensive because they have not, we make these things so periodically and ad hoc that it's like an example of why economies of scale matter. If you do things only like in units of one, totally customized, yeah, no duh, they're going to be freaking expensive. But some of these plants are, they're like, we're going to have a manufacturing line and make a bunch of different nuclear core reactors that we ship out to different plants. And some of those stocks have gone bananas. But the problem is, if there are some data centers, so the hyperscaler references, to the big AI data centers that now need tons of energy, and people tend to not like a nuclear plant in their backyard, and so they'll fight that. And so there's a lot of both local and federal regulatory hurdles to build a new nuclear plant.
Mhm.
But we invested in a company that's making very small nuclear reactors that fit in a shipping container that would only have to deal with like local permitting, not have to be plugged into power lines and wait for they call it the grid interconnect and all that. You just plop down a small reactor in the parking lot of your data center, and it is in energy parlance behind the meter because
Mhm.
it's just yours. It's like the equivalent of a power wall, right? Maybe power wall is a better example, where you don't need as much from your local power plant because you've got solar panels and a battery at home.
Got it. So would you kind of consider that kind of in a way, maybe like a modular infrastructure where you're just plugging in your to the like right to the source? Or no, is that not the right way to
Yeah,
think
yeah.
about it?
No, it's funny. I almost like years ago when I first started thinking about decentralized production, I almost wrote a blog post about like tech in a box because I've seen every manner of contraption and piece of infrastructure proposed to fit in a shipping container. Like I've seen so many of these decks, and I started thinking like, well, hold on, could you just sort of like have like a caravan of tractor trailers and like carry around a small city's infrastructure with you? It's sort of a absurd example, but they're I've seen energy and food production and wastewater treatment and more or less everything you would need to run a society in a shipping container. Not all of these actually check one of the four boxes we described, and so I think it's largely impractical, but it's sort of a fun sci-fi vision.
A city on a trailer,
Yeah.
infrastructure on a trailer. Um, What's your I want to move over to kind of like what I look as kind of this like big enabling layer, which is obviously kind of all this work going on in the embodied AI space, and especially you hear a lot about humanoid robots now and robotics, and want to just kind of get you're very close to the source, being out on the Silicon Valley. Um, how do you think about kind of timeline where the technology's at before we start to really see this potentially integrate into like really affecting and reducing labor costs, especially in the West, these technologies?
For humanoid robotics specifically,
Humanoid robotics,
or
but then
maybe
I guess
physical
just also,
AI writ large.
yeah, generally both. Actually, be interested to get your perspective on both.
In my circles, like the hottest thing right now is physical AI is the term that people are coalescing on, which is like, we've had all these AI advances that are extraordinary, and people are talking about artificial general intelligence being around the corner, and sort of like, we've definitely passed the Turing test at this point, where a computer can make you believe that it is a human
It's
behind the
always new
screen.
though. It's always
Uh,
new, right? It's like you hit the Turing test. It's like, well, then the Turing test is
yeah,
actually a
exactly.
high.
You make a huge deal out of the Turing test, and then you pass it, and everyone sort of shrugs and moves on. Um, but if AI is going to go beyond chatbots and maybe automating sort of enterprise software tasks, it has to be embodied in the real world. And whether that's in autonomous vehicles, which have made incredible strides. I mean, I remember like not even 10 years ago, people in Silicon Valley, being hyped up about it. And then a lot of people sort of said, well, this is way farther out than we thought. The edge cases are so hard to train for. And now, like my wife and I take Waymo as much as we take Uber, and like are perfectly fine putting our 1-year-old daughter in the back seat of a driverless car in the city. And it's wild. because they are, statistically speaking, safer than human drivers at this point, at least in San Francisco. Um, that's sort of the first real commercialized example of physical AI. But people have been working on and pouring billions of dollars into training models for driving specifically for years. I mean, 15 years now. And if we're going to go into every other area of life, um, it either needs to be such a big opportunity that it makes sense to spend billions of dollars training specifically for that use case, or we need something that unlocks like general intelligence for the physical world. And when people say AI today, 99% of the time what they mean is large language models, which power these chatbots. And those are incredible and can be applied to way more than I initially thought. But what they're trained on is basically like the only thing they're optimizing for is what word's next. Like that's it. And it turns out you can apply this to probably to pixels, and well, definitely to pixels, and to protein and DNA sequencing, which is really, really cool. But I'm not totally convinced that LLMs are the right model, or at least exclusively the right model for powering humanoid robots to help us in our homes and manufacturing plants. There
Sure.
probably needs to be some like at least augmentation where you combine it. LLMs applied to the physical world often, or to video, often get called VLMs. Um, and the that probably needs to go in tandem with something that has a more innate understanding of physics and wasn't just trained on the internet and what word comes after this word.
Sure. Yeah, it's interesting because it's kind of like I'm trying to suss out. Obviously, NVIDIA announced their Cosmos model to train in silico, but to train self-reinforcement training robots. And then obviously you hear all this hype, especially about the ChatGPT moment is right around the corner for robotics. And so just didn't know if you had any insights on kind of really in your minds, where are we at with that? Because you kind of keep hearing, that the ChatGPT moment's just around the corner for the self-reinforcement learning for physical AI. And I just didn't know if you had a perspective on it.
I don't believe it is right around the corner. And we have an investment that is undisclosed in a company in this space that is working on a novel foundation model for the physical world that is more innately physics based, and even inspired by evolutionary biology and how we learn to interpret the physical world. But they've got a long way to go before that's commercially available. If you watch, some of the examples of businesses in this space that have raised a lot of money off the bat are Physical Intelligence, aka Pi, World Labs, which was started by a renowned AI developer Fei Fei Li, and then a third one is Skilled AI, and those are really interesting to watch. And you can see demos from Physical Intelligence of like this robot, unloading a washing machine or making toast, and it's really difficult to understand, like in LLMs, again, it's what word is next. And the big revolution has been like, or some of the recent advancements have basically been like, how many previous words can you remember and account for? And then, autonomous vehicles are like, don't hit anything. Like if there's any radar, LiDAR, vision, physical object, just don't hit it. Whereas if you're making toast, how does the model know what pressure to use to grab the bread, which is pretty soft?
Sure.
What pressure to use to grab it when it's toasted, so it's a little harder but still easily breakable. These are areas that the existing production models have not really been trained on yet, at least to a point that the thing can make you toast without ripping the bread in half every time.
Yeah, it's just so hard between the hype and then actually like thinking about it right, really in practice, it becoming a reality. I mean, this kind of like filters me, I guess, into the next question, which is like, do you because of how markets work, right? They go down to lowest cost production locations. That's just how the markets work. Do you see it realistic of being able to make things in the West again in the next in the near term, and actually being able to compete between what's going on geopolitically and the technologies coming out? Do you think it's all going to come together? Or do you think it's going to be much longer timeline?
I think, like many things, it'll be more nuanced and kind of in the middle of a lot of the debates and loudmouths out there. There will be things that, we do make better, cheaper, equally as good. There will be things that we still need to rely on foreign production partners for. I think sort of the mechanics of whether or not we can do it are, um, you know, labor costs, which I think, taking a hard line about immigration kind of goes in the opposite direction. It's like I've heard stories since President Trump was inaugurated. I've heard that like construction costs have been going up because people aren't showing up to the construction site because either they've been deported or they're scared that they might be,
Right.
rightfully or wrongly.
Sure.
And I think it's pretty inevitable that areas that have relied on immigration are going to labor costs are going to go up, at least in the near term. And so it's a function of sort of like the economy, what Americans are willing to work for, and then from a FX perspective, foreign exchange perspective, the value of the dollar relative to other currencies really matters. Mm-hmm. And so you hear a lot of people out there that say, maybe part of like President Trump's master plan is some way to devalue the dollar, because part of the reason China gobbled up so much production is the CCP has arguably devalued the yuan for too long artificially. And when your currency is cheap relative to other countries, it makes more sense for them to buy stuff from you. And this can work if you make enough domestically, because it goes the other way, right? Like everything you buy outside of China might be too expensive, but China makes enough internally. Hungary also incidentally kind of does this, where like you make everything you need locally, so it doesn't matter that your currency is cheap relative to other countries, but because your currency is cheap relative to other countries, it gives them an incentive to send more production your way and buy more from you.
Right.
And so maybe there's something going on where there's like a plan to devalue the dollar. You'll hear like gold bugs. People are obsessed with gold and Bitcoin will sort of, say things like this, and you don't know how seriously you can take them. But that is theoretically one way that we could make it work, sort of take a page, ironically, out of the Chinese Communist Party's playbook. And then, the other is like things that are more innovation centric. Like we are a net exporter of software. It's not thought of in the traditional manufacturing sense, but we've been world champions of software for since its inception. Not that there aren't significant contributions from other places, notably Linus Torvald of Linux is Swedish, but I think those are kind of the general levers you could pull.
Mm-hmm.
I'm frankly not convinced that the current administration, there seems to be some cognitive dissonance with like the aims and the tactics with respect to onshoring production specifically. But there have been some nice surprises too, where people used to say like, even if you could bring all the infrastructure out of Taiwan Semiconductor, there's so much institutional knowledge there that like without if China invades Taiwan, you'd have to airlift these people out because the infrastructure isn't enough. Well, there was an early production run of the new TSMC plant in Arizona that actually indicated that it had, as high quality as the Taipei plant. Now it's a limited production run, so I think we have to take that with a grain of salt, but it's encouraging.
Yeah, it's interesting. It's a complicated one. I think I always go to like I just go back to the labor piece, to be honest, which is like between environmental regulation, labor, especially more in Europe and the US, but then obviously labor cost. um, to be able to really compete, I mean, you're going to have to figure out how to augment the labor. I mean, it's just, and it's all about, to me, just comes down to productivity, right? So
Yeah.
how do you actually increase
Yeah, that's
productivity?
the other big thing. Forgive me, I
Yeah.
missed is
It's like,
if you are more productive, which probably means utilizing technology, then that goes a
sure.
long way too.
Yeah. Like for me, I don't see any other way other than like fully leaning in super hard on the AI and the robotics and automation side as these technologies come together. But,
Yeah, I also
um,
and if you hear Mark Andreessen and Ben Horowitz speak about this topic, they will say that it's all about technology and production. I if we can do it in the United States, there's no reason that people elsewhere can't also use robots. But so I don't know how long that lasts, but you have to keep pushing the envelope. If you do that well enough and keep your productivity higher relative to maybe even higher labor costs, then yeah, we can be globally competitive.
yeah. How, what is your perspective on what the role, like, what is the role of venture capital as it relates to decentralized production? Like, how do you think about it when you think about the companies that you've invested in and around this space? Like, where does your role stop and who needs to pick the ball up after what you're doing on the funding and capital formation side for these companies?
Yeah, this is a really important question because venture capital is very well suited to relatively capital light, technology forward businesses. Um, but once you start to scale things like manufacturing or even data centers, you don't want to fund that with venture capital or even really equity dollars. You're probably you're outsourcing it, or there's project finance, or you're taking on debt to finance it. And there's a whole ecosystem of partners in industrial manufacturing, data centers now. And if you've got a green steel plant or micronuclear reactor or bioenergy plant, or are making robotic lumber mills, yeah, you're probably going to have to venture fund the first one, because more conservative financiers aren't going to take technological risk. They're going to want to see that you've done it before, that it works economically, and then they'll believe you that you can go apply a cookie cutter. But until you've gotten to that point, they'll wait for you to prove it. Once you prove it, venture capital is the most expensive way to finance things, and you should stop selling big chunks of your company to build, plants number 2 through N, and you should work with other capital partners that finance industrial plants. And that's a handoff to a whole ecosystem of firms that often are dissonant with the mentality of Silicon Valley, but people that have been investing in climate tech and manufacturing tech are realizing that maybe we do occasionally need to work with Wall Street. And we ourselves have a couple friends that are sort of sit right in the middle, between venture capital and project finance in the especially in the climate tech world, which I
Right.
think of as just really new industrials. But
Right.
the a term of art now is first of a kind, or
Financing.
folk financing.
Is that still a gap? Or are there people really feeling that? Because really,
Oh
it's
my
like,
gosh, yeah,
there's still a gap.
yeah. I mean, I'm of the opinion that like you have to finance the first one with venture capital, and
I
and
agree completely.
if you can't do that, then you're probably wasting your time. Like if unit number 1 is going to cost $1 billion, unless you're Elon level fundraising ability, you should probably pick something that's cheaper to build.
Yeah, I was like trying to get the sense of, because you know I'm interested in like where these folks on the debt and the project financing side, like what type of technology readiness levels do they realistically need, or do they actually need a fully functioning unit 1 going and operating to really step in to finance?
Yeah, so there are a very limited number of firms that are now stepping in to take some folk financing risk. Usually, what you'll see is they will take risk. They'll take scale up risk, not fundamental technology risk. But if you build a plant that's making, I'll make numbers up, but you're making 1,000 tons of cement a day,
Mm-hmm.
and that's sort of your uh, bench scale or pilot scale, but really pilot scale at that level example. Then you need to go build a demo facility, and they might say, "Oh, we'll believe you if you need to go from 10,000 a day to you know a million a day. That 100x risk, maybe we'll believe, and we'll get in. We'll bring in experts that have done." This component before, and we believe this thing's off the shelf, and that the physics of this pencil out. If you're going to multiply the volume, that makes sense. They'll take that kind of risk, but it is thought of as much riskier than traditional project financiers they won't want exactly the same thing, but just in a different location.
I got it. Okay, cool. Is there just to share with folks, is there like one or two people like that have really been influential in your work and how you think, especially around the space of manufacturing and new industrials, that you'd recommend as a good follow, or people should check out their work or writing or thinking about it? I don't know if anyone comes to mind for you.
Yeah, I mean, an aggregator of a lot of different experts and perspectives with respect to the intersection of climate tech and new industrials is Shale Khan. He has a great podcast called Catalyst, um, and I highly recommend it. I listen to every single episode. That'd probably be the thing that touches on a lot of this.
Cool, man. Well, and then also, so kind of tell people where they can kind of find you and Cantos. Best way to reach out to you if they're working on some stuff that's a fit for your thesis.
Yeah, cantos.vc is our website, cantos.vc. You can find me on Twitter or X at Ian Rountree. There's no D in Rountree. And I'm pretty active there. And then some of my writings at ianrountree.com, or if you just go to the Cantos website, it'll link to the Cantos blog. I have some very smart colleagues that write on other topics. My area is sort of quote unquote deep tech and new industrials and climate tech. I have colleagues that focus more on the intersection of AI and healthcare and biology, and on aerospace, defense, and manufacturing. One of our colleagues joined us from Andreessen Horowitz's American Dynamism team last summer, and some of his former colleagues have written a lot on this too. So I encourage people to go look at the A16Z blog from the American Dynamism team, and there's some pretty compelling thoughts on the topic there too. The exciting thing is that a lot of people are acknowledging that the intersection of technology and the real world is what's going to take us forward and solve problems. And I was actually really encouraged by our vice president speaking at the recent AI conference in Paris earlier this week. I thought that was a fantastic speech. I wish that I hope his boss believes every word of it. We'll see how policy shakes out. But I actually have to admit that Vice President Vance's speech was, and he was notably he was a venture capitalist, right? So knows my world very well. So it's encouraging that there are some technologists in the administration. I hope that they do the right thing to make us more competitive and the world better, and don't cut so much fat they're cutting to the bone. But we'll try and stay optimistic about things.
I think it's a little bit more performative than what's going to happen. So, but whatever.
Politics always is.
Well, hey man, listen, I appreciate it. I really, especially kind of walking through kind of how you think about those four pieces of when it makes sense to look at decentralized production, because it's a good reality check, and hopefully folks, especially building in this space or thinking about building in this space around it, more decentralized production, think about those things, because it's really, really useful perspective. And I appreciate it again. I appreciate you taking the time.
Well, thank you for calling it out. It was a response to a friend's tweet, and there's part of me that was like, yeah, maybe this is actually, novel enough that I should write a blog post or something about it, and never got around to it. So I'm glad that we got to talk about it in more detail. Maybe if 1 in 100 of my tweets make any sense, I'll take it.
Yeah, but it's interesting. I think there's this is like my tension, like what I think about a lot, right? Like it's very interesting because it's like getting it a perspective, like a market-based perspective, especially from like a venture perspective, is also different than like other stakeholders and who have other objectives and other things they want to see happen in the economy and in society. And so I think it's mixing these things in forms of capital and perspective, because I don't think anyone can disagree with more decentralized production from an economic, social, societal level. I just think it's a no brainer, whether it's left, right, public, private. Everyone can agree on the general concept, in my opinion, and supply chain sovereignty. And so I just think it's really important to get these different perspectives. So
Yeah, to the extent decentralization actually helps, and if you decentralize production like we had in medieval times, and people are going to get worse quality and pay more for it. So on balance, I do think globalization is a good thing. It's just arguably went a little too far in taking it back. And if we can decentralize in a way that it is still cost competitive,
yes.
then yeah, there's resilience in that. There's sort of a beautiful uh, sort of bucolic uh, um, geocentricity to it, or community aspect to it. But we're still sharing this planet, and I don't want to fight globalization and outsourcing for overzealous reasons.
No, I completely agree. It's I would say the great thing is the economy used to be inherently decentralized, so you could just kind of learn from history, but you got to apply modern day technologies to make this thing happen. As interesting as we're kind of wrapping up, I think you'll find this interesting. So I just had a conversation with a gentleman, John Olinto. He's the founder of One Mighty Mill, and so I came across John's work about 3-4 years ago, and he's hitting right at the intersection of what I care about the most, which is the food system and fixing the food system in the U.S. And he's building decentralized stone mills across the U.S. And so this was like super interesting. In 1900, there were 25,000 stone mills in the U.S. and it was basically the cornerstone of local food system. Making stuff with flour that works for your body, not against it. And now there's 200,
Wow.
dominated by 5 companies. But what's interesting, he had a very interesting perspective on it. Is he said, if you asked me at the beginning, I wanted to build mills everywhere, right? And he's like, now it's much more like of a regionalized model, like from a reality perspective. So it's getting back to your point around like you can have this vision, but like when it comes to reality and getting products on the shelves and pushing through to consumers and stuff like that, it's a different animal.
Yeah, economies of scale are a thing. They can go too far, and sometimes you get diseconomies of scale. But it is a tried and true way to reduce costs.
Yeah, cool. All right, Ian, I appreciate it, my man.
Jordan, this is a lot of fun. Thanks for doing this. This is exciting.
Cool. Thanks, dude.